Hey everybody, it's been a while since I did one of these. I want to keep this video a little brief. I want to go over a couple of different scenarios here using Wish. You can see it's June 17th, it's around 3:50, so the markets are going to close. I'm sure my bell is going to go off when the, Thinkorswim app has the opening and closing bell at 9:30 and 4. So I'm sure if I keep talking for the next 10 minutes, you'll hear it at some point. Interrupt me very rudely. So, what I want to talk about is using Fibonacci retracements, support and resistance lines, and waiting for consolidation before trying to jump in on a stock. So you can see here Wish was 752. The very next day, it shoots up to around 980 something. And then after hours, when the market closes, this thing takes off. You tend to see a lot of inexperienced traders get a severe case of FOMO because most recently, what do they remember? GameStop, where it went up day after day after day after day for a very long time. So the thought is, I better get in now because this is going to be the next GameStop, especially based on what people were saying on TikTok, Instagram, StockTwits, Reddit, whatever. This is going to be the next one. I gotta chase. I gotta jump in right here at around 13, 14, 15, 16. I don't care what I pay because I believe this is going to double the very next day. It's risky. It's basically gambling. You're taking a huge chance that just because AMC or GameStop did something unbelievable or Dogecoin, that every stock behaves that way. Usually not the case. Even if I was sitting there watching this, as I was after hours going, whoa, I didn't chase, I didn't jump in. I thought I'm going to wait for this thing to cool off. Maybe it takes a day or two of pushing higher and higher, and we'll consolidate. This is consolidation, by the way. When I say consolidation, I mean trading kind of sideways. And it'll consolidate. And that's when I'll get in. Yes, I might have missed out on a little bit of a rally. Yes, I might have been able to buy it at 12 and sold it up way up here at like 20. But you can see that didn't happen. I don't chase. If I miss out on an opportunity, too bad. Because look at the alternatives. Look at what FOMO and chasing into these pump and dump stocks can do to you sometimes. So my strategy was sit it out, wait for it to consolidate. If that means it consolidates at 21 or 17 or 15, I'll hang, I'll wait, and I'll wait for that consolidation. I'll wait for the stock to establish a trading range, and then I'll make a decision going forward. So you probably saw a lot of traders jumping in, buying at the tippy top. I mean, I'm sure someone, if not several hundreds or thousands of someone's, bought at this high and are still continuing to hold the stock. You can see it's 11.21. So some people are sitting on some pretty significant losses. What I would do is I would wait for a sell-off and consolidation, which is what I want to talk about today. And by the way, you have another option here, which is something called a bounce play, which is a very quick in and out, trying to capitalize on other traders trying to also make a bounce play, or potentially on inexperienced traders trying to time the bottom, catch a falling knife, and get a little bit of a bounce. You can see I'm using the 10-day, 30-minute chart, which means each one of these candlesticks is representative of a half hour. When I'm day trading or swing trading and I'm looking at a one-day chart, I like to jump over to the 1-day 5-minute chart because that gives me a more short-term time frame of what's going on in the moment. So just using this as a quick example, if I'm watching the stock, I'm looking for the stock that's selling off, it has a bounce, it sells off further. I'm waiting for this stock to enter oversold position at which point I would consider making a trade. So just a hypothetical, I'm watching, I'm waiting, I'm literally sitting looking at this chart all day, and sure enough, it gets down, it's oversold. This is, at some point, I'm going to consider buying it around here in the 10s, and you can see it closed closer to the 11s. So just to give you some perspective here, a stock like this, you have to buy a significant amount of shares to make it really worth your while. If you purchase 100 shares at 10.50 and sell at 11, you've made 50 bucks. So that's not really, I don't want to say that it's not worth it because everyone has their own different monetary and financial needs. But for me, tying up $1,000 to make 50, if I was a new trader, inexperienced, and I was trying to learn, absolutely. As someone who pays my bills from this, I would have to go 500 shares at least, which would cost me $5,000. And then we can do the math because that's really how bad at math I am. If it goes up 50 cents and I had 500 shares, my profit is 250 bucks. Not bad for the day. You can see today, this is today's chart. really no opportunities here. If you were to buy it here, essentially you're just guessing that it's going to reverse because the indicators aren't there. And sure enough, it does reverse. But I would have probably missed out on this trade. 1075, probably would have sold it around here because we were close to overbought. So 1075 to 1130. Let's just do that math. 1130 minus 1075. Again, 500 shares, 275. So you have now two examples of how you could have made 275 plus 250. You could have made $525 trading the stock in 2 days. However, I most likely would have not made this trade today because the indicators weren't there. In fact, my gut would have told me this thing pushes lower, right? We have a breakout to the downside right here. We have another another breakout to the downside here where candlestick turns red, and you have one here. So we have back-to-back breakouts to the downside, pretty strong volume. My guess says we're going to push lower, at which point, hey, maybe we get into the 10s again and we get oversold. At any point that we actually become oversold, that's when I would initiate a position. So I most likely wouldn't have made this trade today. All right, now let's jump back to the 10-day, 30-minute chart because I want to show you how to set up support and resistance so you don't end up FOMOing in here. We already talked about waiting for it to consolidate, even if it's at a higher price. I don't like chasing when we're so overbought. I mean, hugely overbought. So what I'm going to do is I'm going to right-click. Now, I've seen a couple different opinions on setting up these Fibonacci retracements. Some people say, if you read the definition, you set it from the high to the low. Other people have said this is an anomaly, this one candlestick, but we really have more consistent price of activity here at 1630s. So some people would set their Fibonacci retracement from this level down to the 750s. Other people would do it from here. I've always just done it from here, so that's what I'm going to do. So, I'm sorry, I didn't explain how to do it. So if you're new, you right-click on the top candlestick. Then you go over to Add Drawing, and we're going to go to Fibonacci retracements. And then we're going to connect it to the low of 752, which is somewhere around here. And you not right click, but you left click, and it'll drop this retracement. Now you have your support and resistance lines. If you want to edit these numbers, these are the most popular Fibonacci retracement numbers. 50% is not in the Fibonacci retracement in the math definition. It's not a number, but traders use it anyway. What you do if you want to edit, because when you do this on your computer, it's going to have every Fibonacci retracement. You right-click on the Fibonacci, hit Edit Properties, and then you can select these numbers. Otherwise, it's going to have all of them. I just select the most commonly used ones, which are 161.8, which is considered the golden ratio, 50, 38.2, 23.6, and then 0. So what we see here now, this gives me a better idea of where this stock could form support and resistance lines. Now I'm going to do it this day, 1765 down to here. It's going to show me all these potential support and resistance lines. Sure enough, this stock does start to form support and resistance. It tends to hang out in between the 23.6 and 38.2, and then a little bit into the 38.2 to 50% retracement range. But honestly, you don't even have to use these retracements. You can right-click and hit Remove Drawing, and you can right-click and go back down to Add Drawing and click over here to Trend Line or Price Level. I like Price Level just because it drops a straight line. Trend Line, you can do diagonal, up and down. This one, it's just a built-in straight line, and you connect it to all the highs. And then you can do another one connecting all of the most recent lows, which would be somewhere around here. Right-click, Add Drawing, Trend Line, and we're going to drop it right here. So you can draw your own support and resistance lines, or you can use the retracements. It's your call. On both lines, Fibonacci retracements or your own support and resistance, you can right-click and you can set alerts. There you go, markets are closed. You can set alerts where it says create alert withdrawing, and you can tell it to alert you when it crosses above or when it crosses below. I'll go over both examples why you'd want to use them. Actually, let's just do it now. If this stock starts to sell off, I'm not interested in buying here. So I would say set an alert when it crosses below this line. If it crosses below this line, I'm really not interested. I think it maybe has more room to the downside. And when it does break this support line and push lower, what I'm going to be looking for is an entry point down here, right, to buy. However, you can also buy a stock that's going up, right? I've talked about this before, buy high, sell higher. What you would do in that case is you would set an alert, create alert withdrawing when it crosses above this trend line. When it breaks resistance, that's also a buying opportunity. So you have opportunities everywhere. You have opportunities when this thing goes down to buy it way down here, or you have an opportunity to get in when it breaks out to the upside, like it, say, for example, does here. When it breaks this support line, your phone will buzz, your computer will ding, and it'll tell you this is an opportunity as well. So yes, you might be spending a little bit more, but why we like consolidation is because it lets the stock kind of cool down for a little bit. It gives you an opportunity to enter the stock without just trying to guess and time the bottom. Ooh, it's dropping. I'm going to buy it here. No, wait, I'm going to buy more here. No, wait, I'm going to buy more here. You know, sometimes it's okay to cool down and go, whoa, this stock had a massive run and then a huge dump. I'm just going to sit back and watch and wait and see what happens. Over the course of several days, you'll notice the stock is bouncing between a trading range, which, by the way, you can also trade within the trading range. That's what I do. That's the majority of the trades I make are when a stock is bouncing around in a range. So, for example, 976 to, let's say, 12 bucks. So 12 minus 976. These are, oops, I'm sorry. I cut you off. Let me do that again. 12 minus 976 is a $2.20-ish range. When I do those numbers, 12, 970, whatever, those are rough estimates. You're never going to time the bottom. You're never going to get in exactly at your price. You're never going to get out exactly at your dream price. You're going to get close. That's the deal. The goal here isn't to make all the money. It's just to make some of it. So if I'm able to get the stock somewhere around 970s, 980s, even 990s, it all depends on relative strength. And it also depends on the volume. And it also depends on if the stock is breaking this support line. If it breaks the support line, again, I'm stepping back. I'm not making a trade until we establish a new trading range. So we might have another big drop like this, and then it levels off and bounces. After it bounces around for a while, then I feel okay as it holds support, making a trade. So if I made a trade on this stock at around 970 whatever and sold at around $12, even you can see on 100 shares, I'd be making 224 bucks. But if I'm trading more, like say 500 shares, I'm making $1,100. The thing is, you don't know how long that's going to take. You know, you could buy it down here when it's consolidating on the support line, and it could, in theory, like it does here, it could trade sideways for days. It could trade sideways for weeks. But as long as it's on the support line and not going lower, unless you need that money for a bill or you see other opportunities, you can, in theory, hold that position for days or weeks until it starts to tick higher. At a certain point, though, here's why I do like the Fibonacci retracements. It's going to show you all the potential price targets for this stock. So if I buy it down here at around, let's say 980, this is a potential target, 1130, 1251, 1372, and now you're kind of dreaming, but hey, it could happen because it did happen once before, 1765. So one option, if you are buying several hundred shares, is, okay, I'm in at 980. It gets to the support line, and yeah, it does kind of break through, but it still trades sideways. So let's do, well, we just did the math. 1130 minus 980 is 150 bucks. Do I want to take that profit? I could take the whole profit and wait for it to sell back off and re-enter and do it again. Or I could say, you know, Now it's leveling off on this support line. I'm up 150 bucks. Even if it goes back down to 980, I'll only be at break even. So I'm still walking away with the majority of my money. At a certain point, though, if it does break the support line, then you consider taking a loss. So you've got a little wiggle room here now to consider holding the stock. If it jumps up to 1251 minus 980, you've now made $271 if you only had 100 shares. One other option that you have is, as the stock hits every resistance line, to take a little bit more profit. So if you have, say, 100 shares, you could sell 25 shares. You could sell 50. If you had 100 shares, if you had 1,000 shares, you could sell 100, 100, 100. If you had 500, you could do 100 here, 100 here, 100 here. The point is, you've got options. You don't have to sell the entire position. You can take half and let the other half ride. You can take a quarter and let 3/4 ride. It's totally up to you and how you feel like you need that money. If you are urgently needing money because you've got bills and you're up several $100s on this trade, right? You bought at 980, it's 1251 now. Let's just do that again. 980 times, let's say you had 500 shares. You're up considerably. You could sell off 100 shares. You could sell off another 100. You could sell off another 100. Take 200, 300, 400 bucks and let the other half ride. Maybe it gets to 1372, at which point you could sell another 100 shares. And then you hold on to your last 100 just for funsies. You never know. It could hit 1765. It might not, though. It might not hit 1765. It might hit 1372 and then dump. It all depends, again, on relative strength index and the volume, and maybe even the news, sector-specific or broader economic. So that's just a quick little video. It's not so quick. It's about 17 minutes, walking you through support and resistance lines, Fibonacci retracements, not wanting to chase in on some of these volatile Wall Street bet stocks, waiting for a stock to consolidate. There's a lot in here that could be very helpful for you if you are a new trader. So I hope you found this to be helpful. I hope you learned something. Thanks for watching, and have a good day.